Well, after months of waiting, silver finally broke out today. Well, now that breakout is history. But the good news is it's still early. It's not too late to buy silver. Sure, it would have been better to buy it before it broke out, but buying it right after the breakout is almost as good. It's a lot better than waiting. Silver closed today not only above $30 an ounce, but above $31 an ounce. It finished the week at around $31.50, although I still see it trading. That's up better than 6.5% on the day. Silver is now up more than 30% so far in 2024. Today's close is the highest price and the highest close for silver since February of 2013. And if you look at a chart, it looks like the price is going to accelerate rapidly from here. That's why I am recording this video. But you know, silver isn't the strongest metal year to date. That honor goes to copper, and it's not even precious. Copper was up about 4% today, not quite as much as silver, but it was up 33% so far in 2024. You know, I looked at the 1970s, the inflationary decade of the 1970s. And if you look at what happened at copper prices from 1970 through 1980, copper didn't even move that much. It only moved up about 90% during the course of that 10 years. Now, that's still a pretty big increase, 9% a year, right? That's a lot of inflation that drove up the price of copper. But so far this decade, since 2020, before COVID, it actually got even cheaper if you measure it from the COVID lows, but I'm ignoring that. If you just look at what's happened from 2020 to May 2024, we're already up 80%. This decade isn't even half over.
Peter Schiff highlights silver's breakout above $31.50 an ounce, noting it's up over 30% in 2024. He predicts silver could reach $100 an ounce if copper, which is up 33% this year, hits $1.10 a pound. Schiff advises buying silver now, as pullbacks will be short and shallow, and to hold it until needed due to potential hyperinflation and currency crises.
You know, a lot of people say this isn't the 1970s. They're right. It's not. It's much worse than the 1970s. That's what copper is telling you. In fact, if I look at a chart of copper, I think an explosive move is coming. We may even get to $10 a pound. It closed over $5 today. Think about 508. At $10 would represent a double from where it is right now. But looking at the chart, I think that kind of move can happen. It may even happen as soon as next year. But even if it takes another 2 or 3 years for the price of copper to double, that is a huge move. And believe me, if copper goes to $10 a pound, silver is going to $100 an ounce, probably higher. And that means $31.50 is still cheap. If you don't buy the breakout above $30, you may end up buying the breakout above $50. That could happen soon. So I wouldn't wait. I've been talking to the guys at Schiff Gold, and they've been telling me that a lot of our customers have been waiting for a pullback. I've been advising people not to do that. It's not worth it. Any pullbacks are going to be short and shallow. It's not meaningful if you are a long-term buyer. Like if you want to trade silver or gold, day trader, oh, sure. Yeah, you got to be more strategic, look for pullbacks. But if you're day trading or even short-term trading, you shouldn't be buying any physical silver or gold. Open up a commodities account, trade futures, or buy an ETF at a discount broker. That's what they're for. They're for trading. You don't trade physical gold and silver. The transaction costs are too high. What you do with physical gold and silver is you buy it and you keep it. And you keep it until you need it, not until you sell it. A lot of people are going to need their precious metals, especially their silver. They're going to need it because it may be the only monetary instrument that other people may accept in exchange for goods and services. We have a real currency crisis. We have hyperinflation, which is a distinct possibility. How are you going to buy stuff? If we end up with price controls, which I think may come, there's going to be shortages. There's going to be black markets. How are you going to buy stuff on the black market? It may be that silver is what you need. So you're not actually going to sell your silver. You're going to use it as money. And one of the best monetary silvers is junk silver. If you don't know what junk silver is, those are U.S. coins minted by the United States that circulated as legal tender. Up until 1964, all dimes, quarters, and half dollars were made of silver, 90% silver to be exact. In 1965, they took the silver out of the currency or the coins, and they replaced it with nickel and copper. But pre-1965, you get silver. And they sell junk silver in bags. And they call it junk because it's circulated. You know, you can buy uncirculated dimes or quarters or half dollars, and they cost more because they're more for collectors. If you just want the silver that's in the coins, then you buy the junk silver. And they sell it by the bag. A full bag is $1,000 face, not 1,000 ounces of silver, but $1,000 face. And you can buy it in fractions of a bag.
Continuing the discussion, Peter Schiff points out that the real breakout for gold and silver will likely happen in Asia, where demand is driving prices higher with significant premiums in China. Meanwhile, US and European investors have been net sellers, with gold ETFs experiencing outflows for the past 11 months. Despite this, gold just hit a record high, closing at $2,415 per ounce, signaling strong bullish momentum. Schiff emphasizes that rising prices in silver and copper indicate mounting inflationary pressures, which the Fed seems to be ignoring.
But I think there's a good chance that when gold and silver really break out, it's going to be in Asia, because that's where all the buying is coming from. In fact, if you look at the prices that are being paid in China for gold and silver, especially silver, they're paying big premiums over what we're paying over here. So that's where the buying is taking place. In fact, if you look at investors, both in the US and Europe, they've been net sellers. The ETFs, the gold ETFs, have had net outflows for the last 11 months. Now, I don't know so far for May. Maybe it'll change because this month isn't over and we don't have the data. But for the prior 11 months, investors that buy ETFs have been selling gold the entire time that it's rallied. Gold closed the day up $40. It closed at $24.15 approximately. $40 an ounce on the day. This is the highest close ever for gold. It's the highest weekly close ever because we happen to be at the end of the week. It's not the highest price ever because back in April, intraday, we traded as high as 2,430. We didn't close there. We sold off quickly. That was about, early in the morning. Today, we closed higher than we did the day gold set that all-time record high. I think that's extremely bullish. The charts look phenomenal for gold, silver, and copper. Also, platinum and palladium have been moving up as well. I mean, it's the entire metals complex that has been rising. Recently, Jerome Powell said he doesn't see any evidence of stagflation. He sees no stag. He sees no inflation. Well, he's clearly not looking at copper, not looking at silver. Silver is an industrial metal, but it's also a precious metal. Copper is more of a industrial metal. I think what's happening in silver and copper is even more indicative of inflationary pressures building than what's happening in gold. The big buyers in gold have been the central banks. They're not buying any silver. They're not buying any copper. This is being driven by inflation. And it's not investors who are buying. They should be. But this is real buying from the real economy. Now, sure, gold is an industrial metal too. It's used in industry, just not nearly as much as silver because the price is too high. So they use silver instead. And in some cases, silver is too expensive, so they use copper. But these are very important metals, and they are flashing an inflationary warning that the Fed is oblivious to. The same thing with the weakness in the economy. We have been overwhelmed with economic data recently of weakness in the economy. And Powell doesn't see that either. Everybody is delusional in thinking we have this strong economy and inflation is on track to return to 2%. We have a weak economy. The only thing that's strong is inflation. And prices are about to start to rise far more rapidly in the near future than they've been rising in the recent past.
Thanks for watching. Let's recap. Peter Schiff discussed silver's breakout above $31.50 an ounce and its potential to rise further. He also noted copper's impressive 33% gain this year and predicted it could reach $10 a pound. Demand from Asia is driving up premiums on gold and silver, while US and European investors have been selling gold ETFs. Schiff warned of inflationary pressures and critiqued the Fed's stance on the economy. If you found this helpful, please like, subscribe, and share your thoughts in the comments below.